All right, all right. Which weed stocks is Trump set ablaze? That's what the focus of today's class is. We're going to go in and we're going to look at the weed stocks that have taken off like rocket ships. Now, I have some questions, and we're going to do a little research today. Not only are we going to show you the stocks that went ballistic, we're going to also talk about which ones might go ballistic and why some of them probably shouldn't go ballistic that did. All right. So we got a few questions to ask, and we need to do a little research. We're going to do that together today to find out what's going on here and see if there's not an opportunity for us to make a little money. Of course, we're going to review our portfolio that we already have some stocks in. Don't want to forget that either. And so we got a full day, a lot of fun, a lot of research, a lot of stuff to do. And glad to see so many people here first thing in the morning already. And for those late sleepers, they're going to miss a little bit of this very first stuff. So we'll get a few more people to join us as we move through, but it's nice to see everybody here. It's glad to have you. If you got a lot more people watching than who are saying hello in the window, if you want to say hello, we'll come through and make you famous here real quick. There's Bruce coming in with the gold. How you doing, Bruce? Good to see you. Had a nice conversation with Bruce on the phone the other day. It's good to see Bruce here. We got Albert. Nice to see you, Albert. And John C. Gaisley. Nice to see you, John. I had a nice conversation with John too. So you guys give me a call sometime. Just go to landturner.com and sign up, and it's free. We got a bowl session. Here's where you go. Here's any questions or you can ask privately. Book a free bowl session. Visit landturner.com or scan that little code right there, and it'll take you right over to my website where you can sign up. And we can talk in person. It's fun to talk in person. I like to get to know the people who are here. We do have some situations where we need to somehow set up some sort of a group or a club or a membership so that we can stay in touch a little bit better. We took a few days off last week and couldn't tell everybody why. But, on my staff here at Pitt News Magazine, they were a little distraught over the death of several people in the country, Charlie and Irina in particular. And so I felt like it was appropriate for us to take the entire week off. So that's why we didn't have class last week. And I couldn't, tell everybody, hey, we're going to take a week off, let everybody calm down and settle down. Didn't feel like we should be out chasing dollars on when the whole nation is in mourning, right? It just didn't feel right to me. So, but we're back. We're going to come in. We're going to chase some dollars today, and we're going to go over and look at the weed stock. So let's get started. All right, let's go over. And the first thing we need to do is some of you, I'm sure, have seen the video that Trump put out about, he just posted this on his Truth Social and didn't say anything much, just posted it. And so I figured we could watch this little video. It's short. It's not very long. And, oh, you know what? I've got to make sure. I wonder if I can go in here and audio, echo cancellation. Let's see. I'm not sure if I can turn it on so you can hear the audio. Got to be able to hear the audio. I don't think you guys can hear the audio. If I play it, I don't think you can hear it. Let's just play it. Even if you can't hear it, you can see the pictures. All right, let's see if I can make it full screen. And then you can go find it yourself. There's not any, it doesn't say anything. It's just music. All right, so I'm going to move myself out of the way. Yeah, it doesn't, there's actually no audio other than music. So you don't really, even if you can't hear the music, it's okay. You can just see what it's doing. President Trump shared an interesting video promoting cannabis benefits for seniors, sparking legalization speculation. And it's really a video just about medical cannabis can revolutionize seniors' health. The video produced by the Commonwealth Project pushes the Medicare coverage of CBD products. Now, those are some of the questions I have between CBD products and marijuana. Right? What's the difference? What's the difference between CBD and marijuana? And I think there is. We're going to do a little research into that and see. But you can see he's coming through. He said, reschedule would recognize medical uses, easing research tax and banking barriers and nationwide on marijuana. Now, he's saying marijuana right there, but then he says CBD, but I don't know if that's the same thing. You can revolutionize senior health care. He put this on his Truth Social. Didn't say anything, just let the little video play. It says about 70% of Americans are in favor of releasing this. But the first term saw more restrictive stances. Trump's previous backed state rights on marijuana. So he has backed states' rights, so he lets the states do what they want. But in the federal level, he didn't do anything about it. He made it more restrictive, actually. Wave of legalization in U.S. history, analyzed, rescheduled, could spark the biggest wave of state legalization in U.S. history. So he's talking about rescheduling. I don't know if that means it's legal or if it still needs cannabis legalization is key to economic recovery, much like ending alcohol prohibition up to out of the Great Depression. So maybe he's looking at it to help us pay off that debt. Supporters argue regulate cuts cartel profits, boost safety, and free police to focus on opioids. So they're not going to spend so much time wasting their time on marijuana. They can go after the harder drugs, which makes sense to me. Trump's advisory say they may frame the report as pro-jobs, pro-tax, and anti-cartel, not soft on drugs. So I don't know. There you go. That's the video. So he played that on his own Truth Social. All right. So here are the stocks that took off and went to the moon because of that little video that he played. And I give you the list. It's right here. You can see it. I'll get myself down here so things are a little bit bigger. There we go. And I'm going to make this so you can see it a little better. How's that? Yeah, you can see those numbers better. All right. So up here we got Aurora Cannabis. That's the first one. ACB. That's the symbol. And the next one is Canopy Growth. CGC. Let's click on that one, and you can see it took off. And then you can see Cronus Group, and that one took off. Now this one's, they've all flushed back down this morning. You know, and you have that market take off like a rocket ship. You know, trade the news. You know, there are no facts yet. It's like trade the news, you know, fade the facts. But everybody's just taking profits off of that big run yesterday. They just want their money. Will it turn around and go back up? Probably. But this will give you an opportunity. If you feel like you missed it, you can get in there. A lot of people jumped in, right? And so these guys are just taking the money from the people who jumped in high. Here we got another pullback on GRWG, Grow Generation Corporation. So that's another one that took off. And then TLRY, Tilray, that one took off. Now, these are all small dollar amounts. You can see that this one's trading at $1.66. This one's trading at $1.90. This one's trading at $2.77. This one's trading at $1.50. And this one here is trading at $5.86. So Aurora Cannabis is kind of the one that's been considered the leader. And that's why it's up at 568. If you come over here to the watch list, you can see they're all down. Yesterday, they were all big, huge numbers. But you can see they're all down today. So if you want to get in on this rush, you know, buy the dip. So they took off. Now they're pulling back. Give you an opportunity to get in if you feel like you missed it and you want to get in on some of these runs. We should put some orders on here. So I think for fun, let's go through and we'll do what you might do on your own if you're going to place orders on this. First of all, you can just buy some shares. You know, that's the easy way. But let's come in and do the more profitable way if these things actually do take off. We don't know when or if Trump might do anything on these. And these are cheap. Let's go look and see what some leaps are. You can see the volume and open interest. People are buying long-term options out there, and they're not buying them at the money. I wish they were. Let's go look a little shorter, 171 days. Looks at nobody's buying those. Let's see if we can get down here 108 days. Oh, there's a few people buying them way out there. Oh, there we go. There's some right there. $7 calls, 80 days out. I don't know why they only want to go 80 days out. I would go farther. Because, you know, it might take a while to pass legislation and all that kind of stuff and put the promotion on. It might be a year before we see anything out of these things. So let's go see 800. Oh, there's some people buying the 800s. You got a spread of $400, though. That's a big deal. 472. The spread's not so bad right there on 472. We could come in. Let's buy one of these. And let's just price it out and see. Let's pay $215. We could put in, I don't know. This is going to be in our books for a long time. We'll see how it goes. That'd be 10 of them would be $2,000. All right. So let's just do 5. We'll go we'll go take a look at these. This is in the money. No, that's because that one's way out of the money. That would be $775 way up there. I don't like that. I like this one better. $215, 5 of them. That's $1,000. So you put $1,000 in there, let it sit for, 472 days. Who knows? Where's $472? $472 at expiration. It would have to be clear up here to break even. See, we've got implied volatilities at 75. That's pretty high. That's because these markets are pretty hot right now. We might not want to do it right now. Wait a little bit and see if it doesn't calm down. I mean, this is the exuberance. So if this market comes down and calms down, makes a little curl, that implied volatility is going to go way down, and that premium won't be nearly as much. Actually, I'm doing way too much here. Oh, no, I'm not. Oh, premium's $215 with a $40. It's $255. Where did I get 442 from? The premium is $215. So it'd have to be, plus we got a spread of 40. So we'd have to do 255. It'd be 255. That's not as scary. All right. 255. That would be our break even. It would have to be above here at expiration to break even. Now that's at expiration in 400 days. If it took off and ran again, it could make money before that. It's just, where do you think that thing's going to go? I think we could do that. The implied volatility is really high. 79. It's going down. It just went down to 77. As that market pulls back a little bit, probably this afternoon, we'll probably get a little bit of a better lull, and that implied volatility won't be so high. So we probably want to do this afternoon. But we're in class, so we're going to put it on right now, see if we can get in. Limit, and it's 205. We're buying them, so they're asking 230. So, oh, look, that's a lot bigger spread than it says down there. We go to 230. 230 is what our ask is right now. So see, that's going to be a spread of $125. We're going to have to pay $1,150 for this. $1,150. Let's do a little calculation here. We're just going to take 1,150 divided by, we're going to do 5 of them. So that's 230. That says 257. So this we could bring down 230. That would be closer to our break even at expiration in 400 days. So in 400 days, anything above that would be profit. But it doesn't mean it can't take off and go higher and, make money in the meantime, and you could take some profits off. But if you did this, you could also sell some covered calls against it. Not that they'd be very valuable, because we're only talking $6 stocks here. But that's a way that we could participate in this and, put $1,000 into it. So they're asking right now, 230. We'll do 230. Let's place our order and see if we can get 5 of these things. And they gave it to us. All right. So we got 5 of these in there. And let's go to the next one. Let's come in here to CGC. And let's go price this one out. I'm not saying you should do all of these. We're just looking at them and seeing what they are, right? Look at this, 843 days. Volume. Oh, my goodness. We could do 800 days. This is by 2 years worth of... Go have to see what it is. It's all relative because it's all based on percentages, right? So you just have to see where you're going to have enough time. You don't have to buy more time than you need. 199. We got a few people in here. 108. Looks like on this one, this got some pretty good volume, and the spreads are tight right now. So this would be a good one. You could get onto any of these. 52 days. I don't want to do anything short. Nothing short on this. Is not going to be a short play. Trump's putting this out there. And it'll take it. Wheels turn slowly in the government. So, you might look back in a year and say, damn, I wish I would have bought clear back there. And you didn't, because, well, you just didn't, right? Same thing here. We were talking about weed stocks. We had a video. If you go back 6 months, we talked about weed stocks back in these regions here too. And, we didn't buy then either. So, well, we did. I think we bought some. We did the same thing. We put some on. But that was in our classroom account. I don't think I bought any. I didn't buy any on the real money. This might be a different thing. Trump's doing a little bit, giving a little signal. But I think before we do, let's go ask. Let's go do an ask. I wanted to ask Grok a question about this. So I want to do a little research into this. You guys with me here? Do a little research. Let's ask Grok, what is the difference between CBD and marijuana? Or is CBD marijuana? Maybe it'll tell us. I don't know. I don't know enough about the drug world. The difference between CBD and marijuana lies primarily in their chemical composition effects and legal status. All right. Hold on. Let me get a drink of water here. Chemical composition. CBD cannabis, a non-psychoactive psychoactive. That's a big word. Psychoactive compound found in cannabis plants. A non-cannabinoid CBDs found in cannabis plants. So cannabis is marijuana, right? Or is it not? Including both hemp and marijuana. Okay, so hemp and marijuana. CBD is typically extracted from hemp, all right, which contains 0.3% or less THC, which is the stuff that makes you high, the compound responsible for the high. Marijuana refers to cannabis plants. Marijuana refers to cannabis plants, not hemp, or their dried flower leaves and stems with higher THC levels, typically above 0.3%, often ranging from 5 to 30% or more. Marijuana contains both THC and CBD, but THC is the dominant compound responsible for its psychoactive effects. Okay, give me 1 second. My throat is, I gotta losing my voice. All right, so CBD does not produce a high. It's often used for potential therapeutic benefits like reducing anxiety, inflammation, pain, or seizure. Through research is ongoing and not all claims are fully substantiated. Marijuana produces psychoactive effects, your euphoria, altered perceptions, etc., due to THC. It's used recreationally for the high and medicinally for conditions like chronic pain or nausea, but effects vary by strain and THC. The 1 or 2 times that I tried it, admittedly so, it didn't reduce nausea. It caused a tremendous amount of nausea, so much so that I said, I am never touching this shit again. I don't care. It makes me sick. So I don't know how they say it gets rid of nausea. It causes nausea. I can tell you from firsthand experience. All right, legal status as of September 30th, 2025. CBD legal in many countries, including the US. So CBD is already legal when derived from hemp with a less than 3% THC per. Now, here's the question I have. According to the Farm Bill from 2018, regulations vary by region, and some CBD products may face restrictions if not compliant. Marijuana, federally illegal in the U.S., Schedule I drug, though legal for recreational or medicinal use in some states. Globally, legality varies widely. Legal in places like Canada and Uruguay, but heavily restricted elsewhere. CBD sold in, okay, we usually source from hemp, marijuana sourced from cannabis. All right, let's ask again if Grok knows. Trump played a video on his Truth Social yesterday talking about legalizing CBDs. would that also mean, is the intent to also legalize marijuana? Marijuana. Mary Jane. Yes, on September 28th, which would be yesterday, relative to September 30th, 2025, President Donald Trump shared a nearly 3-minute video on Truth Social promoting the health benefits of hemp-derived CBD cannabis, specifically for seniors. The video, produced by the Commonwealth Project, a group advocating for medical cannabis access in elderly care, highlights CBD as a game changer for issues like pain, inflammation, sleep disturbances, anxiety, cognitive decline, and conditions such as arthritis or cancer-related symptoms. It emphasizes how CBD interactions with the body endocannabinoids system to potentially reduce reliance on prescription opioids, improve quality of life. I'm sure there's a few guys in this class who would like to improve on their quality of life. The video explicitly credits Trump's 2018 Farm Bill for legalizing hemp and thus low THC CBDs, and calls for next step, educating doctors on the endocannabinoid system, providing Medicaid coverage for CBD products, and integrating it into the healthcare as the most important senior health initiative in the century. It also briefly features Fox News clip noting potential $64 billion in annual healthcare savings from broad medical cannabis integration. I don't know how, because if they make it legal, then the big drug companies will be the only ones that go out, and then they'll be the ones that control it, and they'll just turn it into a drug, and then they'll just make all the money anyway, just like they do everything else. I don't know. It's not like you could, if they do that, you'll be able to run down to the local grocery store and buy your CBD off the shelf. You still have to go to a pharmacy and get it, which just means the drug dealers, the drug companies make more money. This post sparked an immediate market reaction, with cannabis stocks surging. Tilray up 40%, 60%, cannabis growth up 18%, cannabis ETF up 21%. Investors interpreting a sign of friendlier federal policies. Does this indicate intent to legalize marijuana? Not directly or explicitly. No, the video and post focus narrowly on non-intoxicating hemp-derived CBD, which is already federally legal under the 2018 Farm Bill, for contents under 0.3%. It does not call for full recreational or medical marijuana legalization, nor does it address high THC cannabis products, which remain federally illegal as a Schedule I substance. The emphasis is on therapeutics, non-psychoactive uses for seniors, posting CBD as a safer alternative to pharmaceuticals rather than a gateway to broader weed culture. Now, I've never tried CBDs. I don't know what they are. I guess it's an oil that you're supposed to rub on yourself. Now, I've gone to the farmer's market there in St. George, and you walk around in those booths, and there's a lady there who sells CBD. And she says, we have a puppy, and she focused in on that. She goes, oh, does your puppy have, is your puppy getting old, and does he have arthritis? Because you can put the CBD oil on your puppy and he'll feel better and he'll have more energy. But she's, of course, saying you can put it on yourself, you'd put it on your, and we talked to her for a minute, primarily because she was trying to tell us to put it on our puppy. But it's CBD is open enough that they're selling it at the farmer's market in St. George. So, however, the timing and context suggests it could indirectly signal support for marijuana reform, particularly rescheduling, moving cannabis from Schedule I to Schedule III. Now, they did say that in the video, and Trump did post the video, and they did say rescheduling this from a Schedule I to a different schedule, which here he's saying Schedule III, which would move the cannabis or the marijuana stuff, make it so the ETF and the police didn't have to worry so much about marijuana. They could go after the harder drugs. Wouldn't spend so much money going after marijuana. Medical uses and ease research tax burdens without full legalization. Here's why. Trump's recent statement in August 25, Trump publicly stated his administration was looking at reclassifying marijuana Market and experts' hopes. The stock surge reflective optimism that CBD endorsements could extend to marijuana as rescheduling would benefit the entire industry. Banking, access, research funding. Cannabis advocates like those with the Commonwealth Project see it as a momentum toward federal medical cannabis acceptance. Caveats and skepticism. Not everyone agrees this foreshadows full legalization. Critics, anti-legalization groups, smart approaches to marijuana warn against overhyping it as a big weed win, pointing out Trump has historically been mixed on the issue, supporting states' rights but opposing federal overreach. Researchers urge caution as CBD's benefit lack robust FDA approval for most claims, and the Post doesn't address regular hurdles like FDA's oversight. Full legalization would require congressional action via bills like the Safe Banking Act, not just an executive nod. In summary, the Post's clear push for expanded CBD access, which is not marijuana, via medical building an existing legality, but it doesn't equate to legalizing marijuana. That said, is widely seen as a positive indicator for rescheduling, and that's where we would get the bump in the weed stocks, which could be a stepping stone to easier medical access nationwide without the recreational high aspect. If scheduling happens soon, as hinted, it would align with the Trump's pattern of pragmatic reforms for the latest monitor White House announcements, DEA's final ruling, drop definitives, always consult local and doctors for CBD marijuana use. All right, so that's a little bit from Grok. So what he's saying, CBD is different than marijuana, and that's what I wanted to kind of point out. A lot of us guys who, are not really in that world don't realize that, but it is. They're two separate things, two separate plants. So he's talking about legalizing CBDs and making it so that you can put CBD in your, get it from a doctor and get your insurance company to pay for it. That's the idea, right? So you're not having to go down to the grocery store and buy it. But you go down to the grocery store and buy it, it's only $3. So if he legalizes it and puts it into the system to where you have to get I don't know if that would take it out. Oh, now CBDs, you can go down to the specialty store on the corner market and buy some. Just get a little bottle of it, start rubbing it on your body and see if it helps. You don't take it. I guess you can put some on your mouth, but mostly it's oil. You just rub it on your sore bones. And after a few days, it's supposed to help, I guess. I don't know. Don't ask me. But that's different than marijuana. The thing is if he lightened up the CBD, if he took CBD and put it into the medical system, all it's going to do is raise the price. And they might even make it more difficult for you to go buy it from the grocery store. It seems to me if they're going to make it so that to get CBD, you have to have a doctor's prescription and you have to go to the pharmacy to get it. That would take it out of the corner market and make it even more difficult. Well, that's what the drug companies want. So that would be a situation that would not be better. I don't know, but that doesn't seem good to me. But it's not marijuana. Marijuana would be the rescheduling from a Schedule 1 to a Schedule 3 drug. I don't know. What does that mean? What is a Schedule 1 versus Schedule 3 drug? Let's ask Rocky on that one. What is the difference between Schedule 1 and Schedule 3? Let's just say Schedule 3 drug. Are you thinking about it? So if marijuana was a Schedule 1 drug and they made it a Schedule 3 drug, what would be the implications of that? That's what I want to know. Come on, Grocky. You're taking too long. I'm going to go ask ChatGPT if you don't hurry up. You don't need to think about it that long. All right. Grocky's taking a little bit too long. We're going to go over and look at our stocks while he thinks over there. I'll put him off the screen over here. When he comes up with his answer, we'll come back and look at it. So this is, we already put our order onto this one. We're down $162. It's still flushing. That's why I say, wait for this thing to settle down this afternoon. Don't buy these right now. We're just doing them right now because we're in class. Let's go look at, might even want to wait a couple of days and see if they fill that gap. They might come down. I don't know. Today's what? Thursday? No, today's Tuesday. So today's Tuesday. So Tuesday, Wednesday, Thursday, Friday, we might get a little dip in here. Be better prices. So just kind of watch them. I mean, I'm getting them on the flush right here with them high implied. Look at the high implied volatility is way up there. So 114. That's really high. It's over 100%. So implied volatility is super high right now. So don't buy your options on these canopy growths or on these weed stocks right now. Wait for them to calm down. All right. I think they will. They'll kind of drop out of the news and things will get quiet again on them. And then you can swing in here and grab a couple of options. So this is 472 days out. If we're going to do that, 58, we buy this. Looks like a lot of people are buying this one right here. A lot of people bought it yesterday. There's right at the money. $10. It's got a $67. That's a big ask right there. 16% is spread. So we'll buy it right now, but don't do this. Don't buy this right now. We're going to do it and put it in our portfolio just for fun, just to show you. But we're not going to do it. We're going to price one out here at $472 on CGC Canopy Growth. All right, and that would be $67. Let's do 10 of them. That's 600. We can do more. Let's do 15 of them. That'd be $1,000. All right, that's where we want to be. Now we're gonna have to change the spread. The spread's gonna take us up to 72. So that's $150 in spread. 1,080. So we'll go ahead and place that order. All right, so we got those. Now again, I don't want you out there buying these right now because the implied volatility is way too high and the market's still flushing like a toilet. These things will settle down, promise. He didn't do anything. He just posted a video. So we'll wait for the market to come and start going sideways a little bit, and then you get these things for half the price what we're paying for them today. So we'll put them on. We'll probably just take them off after class is over. So look at this one coming down to fill the gap way up there, and it's flushing like a toilet right back down. So let's put an order on this one. Cron. Let's just go look and see how far out we can go. We could go. Grocky's still over here thinking. He's not. Let's try that again, Grok. Huh. I don't know why Grok's having a problem here. Come on, Grok. Grok's locked right up. All right, let's go try Google. Let's do this again. We'll go over place an order here on this one just a second. Let's ask Google, what is the difference between a Schedule 1 drug and a Schedule 3 drug? In particular, marijuana. What would happen if it went from 1 to 3? Google searching. Okay, the primary difference between Schedule 1 drug and Schedule 3 drug in the U.S. federal classification system is based on their accepted medical use, potential for abuse, and dependency liability. Accepted medical use. No currently accepted medical use in treatment in the U.S. Schedule 1. Potential for abuse. High potential for abuse. Dependent potential. Potential to create severe psychological or physical dependency. An example would be heroin, LSD, marijuana, cannabis, MDMA, and ecstasy. So those are Schedule 1 drugs. That's what everybody complains about. They're like, marijuana should not be a Schedule 1 drug because, first of all, they're claiming that there is the CBD issue with marijuana, the medical marijuana. They're claiming potential for abuse. I think there is high potential for abuse. I mean, people smoke it sitting watching TV. But the thing is what the argument is that if you smoke marijuana, it's not like you want to go out and do things. You kind of want to sit on the couch and watch TV and eat chips. So it's not like going to cause people to do things break laws. I mean, smoking the marijuana is breaking the law, but then it's not like a secondary thing that makes people want to go out. And when you smoke marijuana, apparently you just want to sit around and smile at the blue sky. You don't want to go out and break windows. Dependency potential to create severe psychological or physical dependency. They also say it's not very, that your body doesn't physically get dependent on it. You get dependent on it psychologically, I think, because you like the feeling and you're like, oh, that feels good, I want to go do that again. But it's not like, oh, I got to have it, and if I don't, I'm going to have shakes and have to go to the hospital and have I'm not going to have withdrawal symptoms like you might have with heroin or LSD or MDMA or ecstasy. These drugs, if you take them and you get hooked on them, you can have severe tremors when you try to come off, very painful. It doesn't happen with marijuana. You just wish you could get it, wish you could have it. Oh, that would be really good. Like, you get dependent on hamburgers too. Oh, I love hamburgers. I'm going to go get a hamburger. Well, that's a Schedule 1 drug. You love hamburgers. Okay, so that's what they're saying about marijuana. Doesn't fit into this category. All right. So Schedule 3 drug has a currently accepted medical use in treatment in the U.S. So they're saying, okay, well, marijuana fits that category. Potential for abuse, moderate to low potential for abuse relative to Schedule 1 versus 3. What is abuse? I mean, if you want to sit on the couch and chill out, that's, I don't know. I don't know what you consider abuse. That's what they're arguing. Dependent potential. Abuse may lead to moderate or low physical dependency or high psychological dependency. Moderate to low physical dependency. Okay, so it's got low physical dependency, but it does have high psychological dependency because you like it. You're like, oh, I like it. I don't have to have it. I mean, I can do without it and it's not going to hurt me. It's just, I like it. So it's like, I'm not talking about me. I don't like it. But psychological dependency. So that's where it does have a high psychological dependency, but a low dependence. So that fits that drug, I think, more clearly. Products containing not more than 90 milligrams of codeine per dosage. Codeine, Tylenol with codeine, ketamine. Well, marijuana doesn't have codeine in it, so it fits that category. So it fits the Schedule 3 category, in my opinion, much better than the Schedule 1 category from my limited knowledge. Now, I have had some friends who have been pretty much into it, so they've told me a little bit, but not from my personal experience. All right, so the federal government, through the Drug Enforcement Administration, places controlled substances in 5 categories, 1 through 5, based on those factors, Schedule 1 being the most restrictive. So that's what they're talking about doing, taking it from 1 to 3, which seems to make more sense to me. What if it happened marijuana went to Schedule 3? If marijuana went to move from Schedule 1 to Schedule 3, a change that has been proposed by the Department of Health and Human Services, currently under review by the DEA, it would have significant implications, though it would not constitute full federal legalization. Key potential effects include recognition of medical use. Okay, so the drug companies would be able to make drugs out of it. Easy research. Tax relief for state legal businesses. Okay, so businesses would have easier. Right now, they're not able to bank. The problem is it's illegal. They can go and have like California, they'll sell marijuana, and they're made it legal to do so on the streets. You go down there and walk around. You can go to the little marijuana store, and you can get your marijuana. But the guys who then sell it, you give them money, and they have a hard time finding a bank that will let them put their marijuana money into the bank. So that's a problem for them too. That'd probably ease that as well. Federal regulations. Any marijuana produced, sold would be federally controlled substance and subject to restrictions and penalties of Schedule 3. This would also likely require more oversight from the Food and Drug Administration, bringing it into a clearer federal regulatory framework. Production likely through pharmacies. Criminal penalties. While the manufacture, distribution, and possession of marijuana would technically remain illegal under federal law unless done in compliance with the drug prescription, the criminal penalties for Schedule 3 offenses are generally less severe. Those would be schedule offenses. Impact on state law. The change would not automatically legalize recreational nationwide. In state law, both pro and anti-cannabis would continue to operate. However, the move will pressure states within medical marijuana laws to reconsider their policies. So my question is, if they put it to a Schedule 3, so what you're saying is if you change it to Schedule 3, it would still be federal illegal, right? Still get in trouble for having it. That is correct. If marijuana is moved to Schedule 3, it would still be illegal under federal law for recreational use, and you could still get in trouble for having it without a valid prescription. See, so if they move marijuana to Schedule 3, all it's going to do is make the drug companies rich, because now they'll be able to turn it into a drug and sell it to you with a prescription that you go get from your doctor. Then you go down to the pharmacy, so the drug companies get rich. Schedule 3 is a prescription drug. All substances, Schedule 1, 3, 4, 5, controlled substances that are only legal with medical use and must be approved by the Food and Drug Administration and dispensed pursuant of a valid prescription. So who do you think's pushing this? No full legalization, reduced penalties. Okay. What are some other Schedule 3 drugs, for example? So if this goes through, the drug companies are the ones that are going to really benefit. So Tylenol with codeine is a Schedule 3. You have to have a prescription to get that. Anabolic steroids, so testosterone, another anabolic, and anabolic steroids, which are prescribed to treat conditions like delayed puberty or combat muscle loss from certain. Now, sometimes I have a really sore back, and I go into the doctor, and he shoots a shot in my back that makes me feel better because I sit in this chair too long, of anabolic steroids, and it makes my back feel better. So that's what that is. Buprenorphine products, whatever the heck that is. Buprenorphine products, non-combined. Buprenorphine is an opioid used to treat opioid addictions. Oh, so if you get stuck on some of these opioids, like MDHA, is that what it was called, MDHA? Then they give you this to get off of it. Certain barbiturates, specifically supposedly a form of anabolic, and big names from drugs. Okay, so barbiturates, usage derivatives. The key characteristics of all these share is that they have a clear accepted medical use, but still carry moderate to low potential for physical dependency or high potential for psychological dependency. They are all legal to possess only with a valid prescription from licensed medical professionals. So if they turn just okay, the drug company is going to make a lot of money. What is that going to do to the growers? The growers, which is what we're talking about here, these are the guys who grow it. So these guys, so what we want to do is we want to look for not just the marijuana companies themselves, which we can definitely play with. We want to find out who's going to benefit from it, and it's going to be the drug companies. So we could ask again. Let's make a statement. So in essence, how do you spell essence? So in essence, what you're saying is that the drug, let's see, we got to put the statement. If marijuana moves to Schedule 3, then it would be the drug companies who would benefit in the long run, even more so than the growers. I don't know if it'd be more so than the growers, but we'll see what Google says. This is a very insightful observation and highlights the key conflicts surrounding the proposed schedule. In essence, you are correct. A move to Schedule 3 provides immediate and definitive financial relief to current cannabis growers and retailers, but sets up a long-term regulatory framework that heavily favors pharmaceutical companies. Oh, wow. Who do you think's doing that? Here is a breakdown of why and how the benefits stacked up for each group. Do you know what we ought to do? Here's what we should do, friends and family. We should get who's our Washington correspondent at Pitt News Magazine? Thorne. We should get Thorne to start running his little. We should get him to look into this. We'll give this to Thorne. What's his first name? He's going to be so pissed I forgot his first name. I did that last time too. Last name's Thorne. Anyway, we're going to put him loose on this, and we're going to have him look into this, and we're going to see if because he knows, he can look it up. He will go in and he will find out if the pharmaceutical companies are lobbying for this. And we'll have him write an article in Pitt News Magazine in the November issue. The November issue will be an article about weed, and we're going to have Grant Thorne, that's his name. Sorry, Grant. Grant Thorne do some deep research into this to find out where the money's at, because that's what Grant Thorne's good at, right? He's good at finding out where the money is. He's our new Washington correspondent. He's going to look into this, and he's going to find out why this is being pushed, where the money is. And you know what's also happening, and I'll bet you this has something to do with it. Bruce, but did you inhale? I did. And man, it sent me into a world of a spin. Just a little bit. I mean, my girlfriend gave it to me. She's like, here, try this. I was like, okay. You know, you're with your girlfriend, you're in Las Vegas. You're like, okay, whatever. So she goes, try this. And so I sucked it in, and man alive, did I get the spins. I spun for 2 hours. It ruined the whole evening. I couldn't do anything. I was done. It was it. All done. I got the spin so bad, I had to lay on the couch and put one leg on the ground and touch things to make sure that I was, it was not a pleasant thing at all. Not at all for me. I thought I was going to throw up the whole time. It ruined my whole trip to Las Vegas. So anyway, back to, sorry, Bruce, there was a little sideline there, but yeah, not a pleasant experience. So anyway, we're going to have Grant Thorne look into this, and he's going to find out where the money's at, and he's going to find out who's doing the lobby for this. But you also have to think about the political side of this. The Republicans want to win the midterms, right? And one of the big topics for Democrats is legalized marijuana. So if Trump throws this out there, you know, they might garner some votes of those people who are sitting on the fence saying, hey, Trump's going to legalize marijuana. You know, maybe I'll set aside all my other grievances with him so that maybe that happens for me. And so he's thinking about midterms right now too. So that might be part of it. We'll get Grant Thorne on this. Maybe I'll see. He's got some other projects that he's really excited about too, and he's trying to get done. But this seems like a pretty good one for our. He's got so many things that he writes. He's really a lot of fun to have on staff because he's got so many. He goes after all of the conspiracy theories and cracks them, finds out if there's real money behind them. If there is, they're not conspiracy theories. And the big one that's coming out in this month, oh my goodness, you ought to see Grant Thorne's article. I'm so excited about it. So he wrote the article, and it's like so big, we took the article, publishing it in Pitt News Magazine, but the rest of his research, we're turning it into a little book, a little novel. It's so good. So we'll have a Grant Thorne novel here coming out soon. It'll be fun. But maybe, I don't know. It's kind of, the rest of his research seemed like to me is big enough to be a novel, a small novel, a little novel. So we turn it in, you know, Pitt News Press, that's what we do. We publish things, right? So we thought we could turn that into a little novel for us all. And so we're going to look at that. It's not quite long enough for a whole novel. So it'd be like a really short story. but it would be fun to publish, put it into a little book, sell it on Amazon for $1 or something. I don't know. It's kind of neat, just fun, something fun to do. All right. So, but you're going to be excited for Pit News Magazine this month. It's got some really good articles. I was like, I don't know, Pit News Magazine, we haven't got a whole lot of direction for October, but man, it turned out to be it's a hot book. It's going to be a hot magazine. It's going to be one of the best ones of the year. It might win an award for the best magazine of the year. And it was one I was thinking wasn't going to turn out. I was like, I don't know what we're going to do in October. We'll have seasonals because we know seasonals is good, but who's going to come through for us? And we got some good articles in there. So be excited about this month's Pit News Magazine. All right. Pit News Magazine. Lan, I'm new here. What's Pit News Magazine? Well, here, let me tell you real quick why we're talking about it, and then we'll come back here and we'll go do some research into some of these other companies, and then we'll go look at our portfolio. So just real quick, get yourself some Pit News Magazine. Where is it? Right.
Ready to level up your news game? Welcome to Pit News Magazine, where stories come alive. Read it, hear it, or watch it in our YouTube classroom. Right now, get your first 2 issues for just $1. Yep, only $1. Don't love it? Cancel anytime before the $39 yearly fee kicks in. Try it out, risk-free. Satisfaction guaranteed, or your money back. Visit pitnews.com. That's pitnews.com. Pit News Magazine. News your way.
All right, Pit News Magazine. So this October issue is going to be an award winner. Wow. Sorry, I just looked out the window and there's a massive black storm coming right at us. Holy cow, that is a nasty looker. Wow. That's crazy. The whole valley, just black out there. Black clouds. Maybe we'll get a little rain. That wouldn't hurt us. All right, so that's what we got going here. Let's dump that. Let's come back over and let's crawl. Look at how far it's flushed. Let's come down and look at a 2-minute chart on this thing. Man alive, it's just turn on our Heikin-Ashi. Look at that thing. It just dumped after that run yesterday. So the market went up and then right straight out of bed. Got a little bit of a climb back up here. Now it's down. Wow. Way down here. Look at it go. Look at it flush. I wonder if there's any new news or if this is just profit taking. People like, it's not everything everybody said it was up to be. There's probably a bunch of news out there, because you get Donald Trump says something and then the news, ABC, NBC, CBS, all the government, all the government news agencies, all the, controlled media comes in and starts poo-pooing everything. So then everybody's like, oh, we thought it was going to be good. No, it's not going to be good. And then, oh, it's not going to be good. And then the market flushes. So buy the rumor, sell the fact. That's what, buy the news, sell the fact. That's a popular saying in this industry. So that rumor was Trump's little video. And then you get the news from all the naysayers. This ain't going to happen. Okay, so Cron, do we want to go place an order on it? That's what we want to do. Let's see what everything's priced out at. That's what we're doing here. This one's really got a lot of open interest on it. 472 days, 199 days. Not nearly as much open interest, but still good enough. What's the spread on it? Is 0.25%, $15. Implied volatility's not over 100. 472 implied volatility is a lot lower. You got a lot higher open interest on it. There are more traders here. Let's go ahead and see what this one's at. Oh, that's a long ways down there. That's a long ways up there. That's a big gap between where the market's currently trading. It looks like 16 more people are trading this one. So I think that one's, but that's people like to buy out of the money. I like to buy a little bit in the money. That's a little too far. I think that's the one right there. So if we're going to do it, we're going to do a 250 call, premium of $80, 472 days out. We're buying a lot of time, but it's not very expensive. And more time is better, but spread is only $10. It's 13%. Implied volatility is 60. I think it's coming down. I mean, we get a better implied volatility on it than doing it right now, but we're going to do it right now anyway. So we're going to come in here and let's see. Let's do 12 of these. Let's do 13. Try to get it up here to $1,000. There's 1,040. So there we go. Put $1,000 on it. And the ask is 85. So we got to run this up here. 3, 4, 5. That puts us at 1,100. We're going to take that back down to 12. Okay, there we go. So we'll do 12 of these at ask is 0.85. And the market's flushing, so implied volatility is at 60. Let's go ahead and see if we can get those. We got them. All right, so that's good. All right, GRWG. Which ones would we do here? Oh, this doesn't look as good. 199 days is, well, that's not bad. Open interest. Implied spread is a little wide. Spread percent is 0.9. Ooh, I don't know if I like this one. 199 days. Implied volatility is 143. Wow. I'm not even going to put one of these on in here. So we'll come over to Tilray. Tilray, implied volatility. Look at, holy cow, 250. Implied volatility is 250. Holy moly. Here's what we're going to do. Here's what we're going to do. We're going to come in here and we're going to go like this. Oh, no. There it is. And we're going to come out here. What was that? Oh, that was 3 days. No wonder it's so high. Hold on a second. We can't do that. Let's come here to 17 days. Still, it's over 200%. Oh my gosh. We're going to come in here. We're going to sell a call up here. See if we can get a call out of this thing. 22. Let's go there. And it means we got to buy a call up here. We're going to put in a chicken wing. We're going to put a spread in. The return on risk is 18%. Receive $9. Margin requirement is $50. Buying power decreases 41. That's a nice little spread right there. I don't think we can go out one more. That'd give us 15% return on our money. This one actually gives us 18% return on our money. It's not as much money, but it's a higher percentage. It's all right. Then we can, okay, so we're going to come in here, and how many of these we're going to do? We're going to do, what's the volume on these things? Is there enough volume to do this? Yeah, looks like it. Let's do 100 of them. So that's $900. Let's see if we can go a little higher. I don't know, 100 of them. That's good enough. We'll do 100 of them. And then we're going to do the 08, I think. This is going to be $200 out of that $800 are going to go to spread. Wow. All right, let's see. We got it. That implied volatility is 220. So if this thing calms down like the rest of them are doing, and it just doesn't, all it has to do is hit that purple line under here. So just not go up. If it goes up and hits in there, we're going to lose $1,000. But if it stays down here, we're going to make $1,000 anywhere. It just has to hit that purple line underneath the red line. That's the carnival game today. Anywhere underneath there, anywhere in there, we'll make $1,000. That's a massive implied volatility. High, massive, 200% implied volatility. That's crazy, man. Crazy. All right. I think I've been smoking weed. Crazy, man. Hey, man. Does marijuana make you talk like that? If you smoke marijuana all the time, do you walk around going, hey, man, that's cool, man. Well, nice, man. All right, man. That's the way hippies talk, right? When we were kids. Hey, man, where's the restroom? I used to work at the gas station. And I get that all the time. Guys come, hey, man, where's the restroom? Hey, man, you got some candy in here? You got some candy in here, man? Hey, man, you guys sell coffee in here? I need a little coffee. We don't sell coffee. We're in Utah. What? You got to be kidding me, man. Oh, man, I can't believe it. Can't believe it, man. No coffee. Do you drink coffee? I drink coffee all day long. Oh, my. Hey, man, got to get me some chips and dips. Isn't it? That's when you smoke marijuana, you got to talk like that. Hey, man. All right, let's see. Let's come in here. Okay, what else are we going to look at? That's our last one. That's artillery. We got to, I'm not going to do anything on grow. Man, that one's nasty. Man, nasty. The spread on it was just way too high. Why did we not do that one? Why did I decide not to do that? 108, 199. Was it? I think the implied volatility was 142. I think that was a good enough reason not to buy anything, but we could sell some here. Why not? Let's do that. We could sell some here. We come in here. I don't want to do 199 days. Let's do 17 again. Let's do 52. We can do 52. Do we think this thing's going to rally up there just because Trump posted a video? No. Let's see. Implied volatility is 125. We want to be selling these babies. 188 on that one. Ugh, nobody's there, though. We can't sell them. Let's see what we can sell. That looks good. We can sell that one. Let's see, it was way up there. We could sell this one, but we need to buy one, too. After we buy this one, it's way out there. I don't know if we can do that. We'll try it. We'll try it. 123 implied volatility. We ain't buying it. Let's see. Open. This is how we're going to make money on these babies. We're not going to do it to the long side. We're going to do it to the short side. This is 52 days, though. Yeah, the other one we did 17 days. We'll try this one at 52 days. It's just got to be, it's got to be in this area right here to make money. And how much will it make? Well, depends on how much we sell. Let's do 10 of them. That's a 22% return. That's pretty good in 52 days. Can't get that at Cash Valley Bank. Margin required is $1,000. So that would be our loss. We received $200. That's not enough, though. We need 50 of these things. That's not going to fly. That gives us $1,000, 22%. $5,000 is our loss. So if this thing market closes above there, we lose $5,000. But if it closes down here, anywhere down there, we make $1,100. And the implied volatility on these things, all it would have to do is just stay down there for a day or two, and the implied volatility go way down, which it will. Its implied volatility is way up there. So if it dropped down to 50 implied volatility, it would double our money in like 2 days. We could just take it off the money. Take it off. We don't have to wait for it to hit the purple line, of course. You could put an order in there and say, once you hit 50% profit, take it off. And it'll just take it off at 50% profit. That'd be $500. Probably make that in like tomorrow. Let's go try it. Let's try it. Should we try it? We'll try it. If you're not willing to try it, you're not willing to make them, you'll never make any money. All right. This is a high probability opportunity, but we got to have, oh, look at this. This is the nasty side. Oh, I don't think we can do it. Look at that. They're not going to let us do it. $750 is the spread. We'd have to pay $750 on the spread. We'd still receive $750. We can't. I would never do this with real money because I can't pay $750 in a spread, even though I got a $750 profit potential on an implied volatility of 122%. We know it's going to drop. Let's do it anyway. Let's do it anyway. Let's do it anyway. It's going to work out. We're going to make money. Even with a $750, that's all spread. I don't know. Kind of a silly trade. These are all silly trades. These are all silly trades. All right. This is chasing dollars. All right. So we're in this thing. Look at all these losers. That's all bad, nasty spreads. See, I told you, pay nasty spreads on these things. So we're going to need to have these things calm down. And these, well, you know what? These are really long-term buys. So these are like, well, we're going to anticipate that in the next, 400 days, the next 2 years, Trump's going to do something about this and the price of ACB will go up. We'll make some money. Okay. That's the same we're doing here. But this one, oh, that one we bought too. We just bought that. We were just pricing those out. But this one we sold. This one I'm a little bit more, these two I'm a little bit more excited about. I think we got a higher potential of making money on these two than we actually do on those three. Anyway, that's how you'd play them if you wanted to play them. Kind of a risky game right there. Not that trading isn't risky. but that's why we're here, right? Okay, let's come down and look at our other portfolio. I'm going to come in here. And I'm just going to go new, and I'm going to go, this is our YouTube class. It's already in another file, but I'm not going to go change over to another file. We'll just do it right here because we can just come into our open positions, and now that's going to get all of our weed ones too. That's okay. We're just going to go all, and I'm going to right click on it and say open charts. And that's going to open all the charts in our portfolio, including all of our weed ones. Oh, have we only got, that's not all of them. Or is it? Oh, it is. That's all of them. Okay, let's get rid of the weed ones, because just to clean things up so it's not so messy in here. All the ones we just did, we'll just take out of this portfolio. So we really only have 2 trades on? All those? Oh, I guess we really do only have 2 trades on. We got United Health and BlackBerry. All right, so those are the ones we're playing with. Those are the ones we got last time. We're up $8,000 on our BlackBerry. Now, BlackBerry wasn't something I came up with. Somebody here in class. I thought it was you, John, or something. I thought somebody came up with this and said, hey, let's buy some BlackBerry. Or look at BlackBerry for me. So we pulled up BlackBerry and I said, let's put an order on. I'll show you how we would do this. And it just happened to be right at the break of the blue lights. This market took off and went to the moon, surprisingly enough. But we used it as an example. And I'm going to actually write an article probably in the November issue about this particular trade. And I'm going to show you as an example. We're going to have this as an example because this is a beautiful example of what YieldMax does. This is how they trade. Now, many of you, because you've been following me, know that I like to trade the YieldMax funds. And YieldMax, the way they trade, now they don't trade BlackBerry, but they do trade. This is the strategy that they use. Now, they don't use this one. This is just a long call right here. I mean, long position, 500 shares. But what they do is they do these option strategies. This is the exact option strategy that YieldMax uses when they trade for us on our behalf, right? Because we give them our money, we put our money into TSLY or into PLTY or something, and then they take that money and they go and they trade options on the underlying stock for Palantir or for Tesla or something. And this is the strategy that they use. So they come in here and they buy a synthetic long position using options. Now, a synthetic long positions means that they buy a call and they sell a put at the exact same strike price. Now, they do it a lot fancier than this. This is just a simple one-off. They do laddering. Okay, so they have ladders where they go multiple deep and they go multiple lengths in time. So they go both price and time, multiples, and they set them off and then large quantities, right? Because they got a lot of money to trade and a lot of people are giving them money to trade for them. So they have to come in and they do a very fancy laddering and time laddering strategy, and it's proprietary. They tell us what they're doing, but they don't tell us how they do it. Okay, so they're doing a laddered synthetic long position with covered calls. So that's why they can have such a high return. They can have these 50, 60, 70, 80% returns. Now you have to take the NAV decay away from it, but that's another story. And there's an article in Pit News Magazine coming out in October where we talk all about NAV decay. So that's a really important article for you to listen. It's kind of like a book. It's a long read. All right. Yeah, I wrote it. It's a long read, but it's important because it answers a lot of the questions that a lot of the new guys that are getting into this have been asking. I got a lot of new students who have signed up to a lot of these YieldMax funds that I've helped get into the YieldMax funds, and they got lots of questions. So I wrote this article answering all the questions that you might have all about the YieldMax funds. Now, of course, it's just an article in Pit News Magazine, so it's not all the answers. There's just a lot more answers, a lot of more questions that you can get, but it covers a pretty good swath of questions. So you'll want to read that article. Of course, you don't have to read it because we recorded it, so you can just listen to it. But then the written word is there, so you can go back and reference it. So that's what's cool about Pit News Magazine. So this is the strategy that they do, and that's why I wanted to highlight this. And we'll put this into Pit News Magazine in November and create a lesson around it so you can know how they do it. And it's not that you need to know, but it's fun to know. You know, this is I like to trade options, been trading options for years and years and years. And I love strategies that trade options. And that's why I kind of like the yield max funds, because I know what they're doing. They're trading options. And so I like that. And that's something that I lean towards. It doesn't mean that you have to like them just because I do. I'm not here to tell you what to do. I'm just here telling you what I do. All right. So this is a synthetic long, these two options. And what you do is you buy the call, and let's say in this case it costs $5,000, and then you sell the put at the exact same price. Now the implied volatility was strong to the upside, so the put option was only $3,000 to collect the premium. So if you sell the put option, you get $3,000, but you had to pay $5,000 for the call. So rather than paying $5,000 and just buying a long call, well, you get the $3,000 to help you pay for the call option. So now you really only paid $2,000 for a $5,000 position. That's pretty cool, right? That's how that works. It's called a synthetic long position with options. All right. So if you want to do a little research, go ask, pull up old Grok. We'll see if Grok can talk to us yet. He was a little busy, he said, last time we tried to talk to him. Please explain to me a synthetic long position in the stock market using options. And that will give you, hopefully, a nice little description. A synthetic long is a strategy in options trading that replicates the economic payoff of owning a stock, being long the stock without actually buying the shares outright. It's called synthetic because it uses options contracts to mimic the behavior of direct stock ownership. This approach can be useful for traders who want exposure to a stock's upside potential with potentially lower capital requirements, or to arbitrage price discrepancies between the stock and options markets. How to construct a synthetic long position. So there you go. You can go through and have Grok help you set that up. And then you just go over to Track and Trade and put one on, try it. Go and create a bunch of synthetic longs in your demo account in Track and Trade and learn all about synthetic longs, because they're really cool. All right. You should have 10 synthetic longs on by tomorrow. I don't care if they're good markets or bad markets, just to put them on to practice and see what they do. In your demo account, go put on 10 synthetic longs now that you've learned what they are, and you can see what YieldMax is doing. Now, YieldMax adds another layer to this, of course. The layer that they add to it is they also do a covered call. Now, I didn't put a covered call on this one, because if you put a covered call on it, it caps the amount of growth that you can have. So if we'd have put a covered call on here and sold one for, say, $2,000 at this level, well, what would have happened is we'd have got the $2,000, but we'd have sacrificed all the money above that. So anything above that, we wouldn't have got. All right. So that would have been our loss, or not loss, but an unrealized gain. But that is how the synthetic longs work, and they take the covered call, so they get the premium. So that's why YieldMax I like, because they give you not only growth in the stock, right? The growth between the difference between the synthetic long and the covered call, which stops the growth, but they get the premium from it. They get that amount of money, the distance between where they buy and where they sell, which is the covered call. That's what a covered call is, just saying I'll sell it right there. But you get a premium for doing that. And so now you get the growth of the stock and you get the premium, and that's how they make these big returns. All right. That's how they do it. That's their strategy, and you can do it yourself. Go practice. And then they do it again and again and again and again and again, and they just keep doing it over and over with a laddered series and different time frames. All right. We went out 108 days on this one. Just, I don't know why, but we did. So we gave it some time, and that one's going up. Then we bought 500 shares to show a comparison. And the 500 shares, which is in here, you can see right here, the 500 shares up $552, but the synthetic long is up $7,000. Well, that's pretty cool. That's the leverage that you get with options. Okay, so that's our BlackBerry trade. So let's go into United Health. Now, United Health, what we did is we just came in and we bought the long call, and we did the covered calls up here. So we sold 3 calls and collected the premium of $648. So you can see our options premium is up $225 on the calls that we sold. So that's a 34% return right now. Now, if United Health starts to go up in anticipation of rising up out of this little pennant formation, which I'm betting it will do, right? So you got a little pennant formation. Land, draw your pennant properly. Okay, across the top, back down the bottom like that. Okay, so there's your pennant. So if it breaks out the top of the pennant, that would start losing money on our sold calls. And we would cap our profits on this at that level. So we'd want to liquidate that before expiration, or they would take away our long calls. And we don't want that. So we'd have to make sure we liquidate. Okay. Liquidate that sold puts. But we could liquidate them now at a 34% profit. If the market starts to go up, then that 34% would probably go down. Well, no, no, it wouldn't either. It's still it's going to hit the purple line. We get 100%. Right now, it's at 34%. If it starts to rise, then this could go down. So the question is, do you think that this is going to rise or fall? Right now, it looks like it's going to rise. Look at that pattern right there. That is straight out of the manual. Do you need to see the manual? Yeah, Len, show me the manual. Okay, I'll show you that pattern right there. Look, the rally, the little pullback into red, the little greens, and the little reds. Now, if you read Aiden Gray's article in Pitt News Magazine in the October issue, which, oh no, it's not October, September, in the September issue. It's the current issue that's out right now. He talks about that pattern in the magazine, doesn't he? We could pull up his article. I think we could pull up his article. Where is his article? Pitt News Calculator, Investments, Noy Economics. It's not up. www.pittnews.com/magazines. That's 2025 / it's the 09, right? I can't remember what it was. I can't remember the password. Let's just go do it this way. pittnews.com/slides. Is it slides like that? No, it's got to be slides.pdf, doesn't it? Slides.pdf. Yeah, there we go. Okay, so sorry I couldn't pull up Aiden's article, but it shows this pattern and he talks about it, and he talks about it using synthetic longs. So it's a really good article. If you haven't read it, go read it. So here's the pattern right here. Where is it? It's one of these right here. You got all these patterns. Look at all these little patterns in here. That's this one right here. Look at this. Okay, so you got this is the up one. Up, down, red, green, red, and take off. That's the pattern right there. That's the exact pattern we're looking at on United Health. It's gone into that little pennant formation. Look, it's the exact colors too. It goes green and then it goes red. Now on that one we got Fibonacci turned on. These bars are not necessarily Fibonacci, but they come up as green and then it goes red and then it goes green and then it goes red and then we got one green. Now the green that's coming up on United Healthcare isn't kind of a breakout green, but it is the exact same color scheme. Look at that. It's green, red, and that green, can you guys see it? Needs to be a breakout green. That's the exact pattern, colors and everything. So we should probably want to take our profits off right here. I don't know, because if it hits that purple line, we'd get 100%, $432 instead of $216. But if it starts to go up, that'll go down. But if it goes up and then down and then hits the purple line, all it needs to do is hit the purple line under that red line. If we get another big run like that, we'd be in trouble. Wouldn't get all our money. Let's leave it though. I think I'm gonna say that we're gonna. It's a hard call. We're gonna keep it though. We're gonna leave it for now. We're up 34%. That's a good return in just the few days we've had it. $222, 34% in what? How long have we had this? We've only had it for a few days. And 1, 2, 3, 4, 34% in 4 days. That's all we've had is 4 days. We've already up 34%. Can't get that at Cash Valley Bank. Go down there and tell them you want 34% return in 4 days. They're going to say no, no. Did you hear me? I said no. All right, guys. There's our portfolio. I did, just for fun, just to cap this little class off, let's pull up my UBI portfolio in, this is Portfolio Matrix. PortfolioMatrix.com is where my portfolio is. So go sign up for PortfolioMatrix.com and you can have your portfolio in Portfolio Matrix like I do. Let's wait for that to load. I don't want it to load the whole thing. My UBI portfolio. This is the one I want right here. So we're going to come down, and I did add one yesterday. I put some money in Snowy. So you can see I took I was doing, this is Snowy, and you can see my dividends coming in from Snowy. That's what that purple line is. Every month I get a payment, and that's that big payment. And then you can see I took a gap in here. See that gap right there? That's because I was rebalancing my portfolio. And I guess if you rebalance, yeah, I made a lot of mistakes in my rebalancing, and I'm admitting that. And I'm telling you, be careful with your rebalancing. Don't try and do what I did, which is do it all at once. I tried to do it all at once. I should do just one at a time and just be careful and rebalance a little bit more cautiously. I was a little bit wild and crazy on my rebalancing. All right. And I shouldn't have been quite so wild and crazy. I think next time I'll be a little cautious, a little bit more cautious, a little bit more careful on this one. So I had a gap in there. So I sold them off and then I just bought them right back a month later. It didn't do any good. Didn't do any good at all. In fact, I think I lost money on it because I missed out on a dividend. Now I'm still going to get a dividend. The dividend for Snowy comes up here. I think this one is September 4th, so October 4th. So I still got a dividend I'm going to hit. So I didn't miss the dividend. So I think I'm going to still get it. I think I was at least that smart. I kind of did some dumb stuff. But I took that break in there, and so now that's why I've got Snowy back in my portfolio again. All right, so that's what I put back in. And you can see down here, total dividends. So my total dividends that I've got out of Snowy since I put in there was $17,000 for a 23% return. All right. Return on cash cow, I got 42% at 17,000. Here you can see all my dividends. So how much did I have in there? I think I have in there right now, I have $60,000 in Snowy. And these are my dividends. I think I probably have about the same amount as I had before, somewhere around there. Anyway, you can see my dividends, 151% total. At 3,000 that month, 5,600, then 7,000, then 9,000, then 12,000, 16,000. There's my 17,000. So that's a cumulative. So here's the individuals. So I got 1,800 in January. In February, I got 22,300. And then in January, March, I got 2,000, and then 17, and then I had a banner month at 3,300, and then on June I got 3,200, and then July was kind of a crappy month, 1,200. So that's where I sit. That's real money. This is a real money portfolio. This is not a demo account. So you can see my open positions. And my UBI account, I have $725,000 sitting in here. And they're all in, here's my portfolio. You can see Coney, OARK, Beatty, Hoy, Snowy, NVIDIA, Tesla, Biddo, Misty, and Palantir. So that's the ones I have my money in. Now I have I have a traditional down here, which is a little bit different, but pretty similar. I have Coney, Hoy, Tesla, Misty, Carvana, and Palantir. So that's in my traditional IRA. Now, what I'm trying to do, part of my rebalancing was trying to get some of the high yield ones and move some of the money out of my traditional, this one here, my UBI open portfolio, move it out of that one and into my IRA, so that my IRA actually makes more money, because IRA, I don't have to pay taxes on it yet, and it can grow tax-free, right? So this one, I can't have to pay taxes on them every month. And this is actually my bigger portfolio. So if you see my UBI portfolio, I have $725,000 in there. My traditional IRA is smaller. It's only got 200,000 on there. So I need to get more. Well, I'm maxed out. I have actually, I have a bunch of cash sitting in there. It still needs to be, I'm waiting for markets to kind of dip a little bit and I can put them back in. But I want to get more money into my traditional IRA, the big returns, than in over here, so I don't have to pay tax on them right now. I'm going to pay taxes out the wazoo on all of these. And I'm doing a little tax loss harvesting, but you know, you can only harvest $3,000. So that's all they let you harvest every year. So you kind of, I'm having Doc Brown write an article on tax loss harvesting again. He wrote a little one before, but going into it a little greater detail. So we're going to write another article on tax loss harvesting, since we're getting into the season for tax loss harvesting. So he's writing an article on that. It'd be nice for you to read. That'll be in the October issue. Is it? No, it's going to be in the November issue. He's writing the article for November. All right, so that's my portfolio so far with those two. I got a Roth, but it's so tiny, it's not like worth even looking at. It's got like $5,000 in it or something. I just started it because I'd never been qualified for it until I got married. I just got married a couple of years ago. Cheers to me. And so now I qualify for a Roth. How about that? So I guess that's all there is for this day. If you guys have any questions, let me know. But I have a couple of little fun things we can look at. First of all, this one.
Okay, this is the software I use. It's called Track and Trade. They've got two versions, one for stocks, one for futures. This is the website, trade.com. This is where you download a free 2-week trial. No credit card required. Okay, go download your copy, then come back here, follow along, and I'll show you all my settings.
All right, so that's the software we were using to do all those options trading with. And look at those portfolios of weed stocks. But then also Portfolio Matrix is where we have all of our UBI, Universal Basic Income growth strategies. And then you can see mine's doing pretty good here. I started down here, and this is my growth right here. This is my realized equity growth right here. Straight up. So this one here, this is what they show you, the brokerage firm. We don't really care about that one. That's not the one that's important. This is the one that's important. And you can see mine's going straight up. So doing pretty good, pretty happy. So far, this one account, which one is it? Oh, yeah. Let's see. I've reinvested. So I've made contributed, invest break even 238,000, contributed 153, and reinvested 184. Down here's where it shows all my dividends. So for the year, is that what we're set on? Yeah, 1 year. Well, we should just go back year to date. Year to date. Ooh, look at that. Beautiful. Year to date. Look at all these dividends. Making money. Total dividends, $77,000, 38% return. That's not bad. 38% return is pretty good. I'd like better. I have my trades. This is the drawdown. So it's actually 29% if you count it against the NAV decay. So I'm up 29% on my traditional IRA, 30% return this year, so far this year. That's pretty good money. I'm not complaining about that. 30% return in, what are we? October, 10 months, $77,000. That's a good little profit to add to the bottom sheet of my traditional IRA. Way more than I was getting before when I had it. I had it with Vanguard. And holy cow, when it was sitting in my Vanguard account, I was lucky to get like 3%, 4% a year. Piece of crap. That was the, yeah, but your business gets to contribute 3%. Okay, so $71,000 in dividends so far this year that we've been able to reinvest. So that's compounded growth right there. That's the seventh wonder of the world. Compounded growth. All right, that's Portfolio Matrix. If you don't have Portfolio Matrix, go get it. It's over at portfoliomatrix.com. Sign up, put your portfolio in there, and you can see it like this. It's cool, cool, cool. There's also all kinds of other fun tools. We got all the targeting stuff that you got to play with. This is the actual beauty of this whole thing. And we talk about it very little, but this is the beauty of this whole thing right here. So being able to do this type of reorganization structure, this is what's cool. So all right, guys, I guess I've pontificated enough. We're going to go eat a little breakfast. We'll let you guys go. And we'll do one more little fun thing here. We got to take a look at this one.
Okay, quick question. Are you subscribed to Pitt News Magazine yet? No? Really? Then what are you even doing with your life? Here's the deal. Pitt News on air is like the espresso shot. Quick, a little chaotic, and probably too much of me. But Pitt News Magazine?
All right, that's enough of Claire's cartoon. All right, buy Pitt News Magazine, Pitt News Press, over at pittnews.com. Sign up and get your magazines. Even Claire says, well, that's a cartoon. Can you believe
Okay,
that?
quick question.
Holy cow, that's a cartoon. She said, I said, I can't play that. She goes, it's land. Sex sells. All right. So that means we should get lots of signups. All right. Because we have a sexy cartoon of Claire telling you to go sign up for Pitt News Magazine. All right, guys. We've goofed off enough. We'll let you go. We'll catch you tomorrow at 1 o'clock in the afternoon. We'll do a little day trading. Come join us. Be there or be square.
All right, that wraps it up for today. If you got something out of this, do me a favor. Like the video, subscribe to the channel, and share it with someone else who's trading or learning.
Hey, don't forget to tell them to subscribe to Pitt News Magazine.
Oh yeah, definitely subscribe to Pitt News Magazine. You'll thank us later.